May profits be upon you. Welcome to another weekly market forecast. We're going over the three indices, the S&P, the NASDAQ, and the Dow Jones. We're going to analyze and look for the best setups, best possible situations for the upcoming week for March 10th through the 14th. Right? We already looked at the economic calendar in my prior forecast that I posted for the FX markets. You can look at any of those. I'll leave a link in the description. But the main deal is the S&P, the CPI data coming out on Wednesday. We have interest rates for the Canadian dollar as well. That on that day, there's going to be some decent liquidity throughout the week for traders. All right, but we got to take a wait and see approach. Monday, there's not going to be any economic calendar, the red folders, and that's a time where you want to step back really and just watch the market unfold and let us see what which direction they may choose to go in. All right, especially during the CPI data week, the day before or the days leading up to the CPI data coming out, the U.S. markets and the other the majors subsequently, they tend to consolidate, or they may go in one direction until CPI data, and then they go in the other direction. So that's my preamble. Okay, now let's take a look at the S&P. These are my notes from when the week closed last week, but overall, we can see that the market's still it looks very bullish. It looks very bullish. I mean, come on, we have a higher high, a higher low, and a higher high. We're just now starting to pull back, and we're not even close to the 50% of this trading range. All right, so this impulsive move, we're just now starting to have some sort of pullback. But what I want you to make note of is, so I'm just understand overall I'm still bullish. All right, but what I want you to make note of here is this big wick here. All right, coming down into this order block and respecting the low of that order block, and prices moving higher from it. All right, it creates an area of demand. If I can get this thing to write it. All right, there you go. It makes this area of demand, which price dipped into once, and then now we are returning to it right now. You see a little respect being shown here, but I am kind of expecting, a price to maybe find some support for a short-term move to the upside. Well, at the very least, in the short term. On the weekly, all right, we can see this a little closer. Look at this wick. Look at this. Look at this. This area here. This is an area of fair value. This is an area of demand. The overall area here, I'm sorry, is the area of fair value. All right, and you look for the demand zones inside of that area of fair value. All right, we have one here, an area of demand, and an area of demand down below. Now, I like this low to act as a liquidity low, a liquidity target to bring price into this area of demand. That's the way I like to normally see it. I make that comment a lot in my videos. If you've been watching my videos, you know what I'm talking about. All right, but what we have to deal with first is this one. All right, now price, you can see the order block has been formed here. All right, this a sell before the buy up. All right, you can see price has traded multiple times into this area of demand. All right, and here we are penetrating, but showing a little bit respect in the end. So do I expect price just to turn around here? No, what I'm looking out for some things. One, the 50% of the range of this order block, the consummate encroachment, or the mean threshold of this this demand zone, I'm looking for price to show respect to it. If price trades through and closes below that 50% mark, then I'm thinking we're going to use this as a liquidity point for the demand zone that lies below. Do you get that logic? All right. Now, if we look at the daily, remember this is S&P, the S&P futures. Okay. All right. Here is our area of fair value. All right. This is the higher time frame. The weekly and the monthly demand zone. All right, we are chopping our way into it. All right, but on Friday we had a relief rally with the Fed chair saying that we're going to have a wait and see approach to the interest rate cuts. So what I'm looking at is, you see how uh, we have this. Why is that not writing? We see how we have this big wick here. All right. And it closed. You see where this one closed? This close, and the fact that we got above it here is a bullish indication in the next candle. That is a bullish indication to me. All right. The fact that we did not close on Thursday below these lows here. All right, and price pulled back within the range of the previous candle is a bullish indication to me. All right, and then Friday's closed back within the range of this other candle of Thursday's candle, another indication. So I'm looking for price to potentially climb. And what area am I looking at? All right, I don't want to take buys. I'm not going to take buys from this area. No, I'm not. All right, I think that would be way too aggressive. What I would be looking for is price to break this high. Now, why am I choosing that high? All right, go back to the monthly. All right, I'm looking for price to what's the word? Come back and possibly tap that low, because this is an area of supply here. All right, I'm looking for price to come back and tap that low. I honestly don't want to see a fair value gap forming, which would indicate lower prices. I'm looking at these bullish respect wicks to hold and push price higher. So if we go back to the daily, all right, I'm moving this line essentially to this line. Why? Because, and we can actually get rid of that line now. This is a buy up before a sell off. All right. That would make this area an area of supply. Come on, man. Why are you driving me crazy? This would make this an area of supply. All right. And price is already pushed lower, but push back into this area of supply. Once this protected high, because that's the high of an area of supply. Once that protected high is taken out, then it's the market has shifted from bearish to bullish. And once I see that shift take place, I'm looking for price to pull past this protected high and pull back into it, so that I can take a higher probability trade to the upside once price finds the support there. All right. So if we see price, watch this, so I can make this easy for you. Once price pushes past this high here, I'm looking at this area becoming an area of demand. And then I would be looking for higher prices. This area becomes this area could easily become the area of demand. Once this high is taken, the buy up before the sell off. Once price takes that high, that becomes the area of demand, and this should look like demand. All right. And I'd be looking for a higher probability trade to the upside to take out these highs. Does that make sense? I hope it does. Okay, because that's what I'm looking for. If it doesn't happen, it doesn't happen, and I don't enter. I'm just not going to enter into any old thing. All right, so that's that. All right, now the same setup is on the NASDAQ. All right, if we look on the daily, we see the same kind of situation, the area of fair value, the fact that price has traded into it multiple times. All right, and here we are again. All right, and the fact that we have penetrated into this area of demand, and we have so far respected the mean threshold of the large area of demand here. We haven't come down to the 50% mark. We see uh, this wick of respect. I'm looking for price to take that line out, all right, and push higher. This becomes the area of demand here, all right. This this area. Once we take that high out, I'm looking for price to come back to that area so we can continue to the upside. All right, I don't. The way this is chopping into this area of demand makes me think that we may be having a turnaround. All right, as price enters into these fair value gaps on the daily. Look at that respect being shown. These are old fair value gaps. I don't normally count them, but because of the context that they're in a larger area of demand, and I'm looking for some upside from there. Now, if we go to the Dow, right? You can see the Dow is still bullish, same as the rest of them on the weekly. This is the weekly time frame, right? You can see how price formed this buy up before a sell off. This was the area of fair value. Price came back into that area of fair value, found the refined area of supply, and acted accordingly. Started to fall from it, all right, into what? This area of demand, which is in this area of fair value, this sell before the buy up. All right, this is the area of fair value, and this is the area of demand inside of it. And what do we see? A wick of respect. All right, and this is the means threshold of this area of fair value. So right now we're showing respect to it. If we go down to the daily, you can see I like the respect being shown to that weekly area of fair value, of that weekly fair value gap. Price chopped up into it, respected it, and then came down. I'd just like to see that kind of a price action. But the context is we are now in demand, and you can see these wicks forming here, and none of them close below the look, did not close. This is the 50% area, all right, of this area of fair value. And if you look closely, there's a white dotted line. You don't see it. It's running right here. Price closed right at it on Thursday, and then above it, traded above it on Friday after this relief rally, courtesy of the Fed. All right, so I'm encouraged by that to think this is a bullish indication, and I have the same area marked on the Dow. This is the area of the current area of supply here, right? Let me get it. There you go. All right, we have a current area of supply. All right, price did not manage to get too far below it, and here we are coming back into it, trading past the halfway point, right, and closing within the range of the previous candle. All right, that's usually an indication that we're probably coming up towards the highs here, and I would like to see personally price go up. Oh, I messed that up. I'm sorry. All right, price go up. Take out this high, this protected high here, and just pull back into the new area of demand from this candle, right? And continue higher, just like in the the other indices. This is a wait and see approach. This is something that you just got to be very, very patient with. And I'm not jumping in on the first thing moving. All right. I have to see some confirmation. All right. And this is the confirmation I would need: a high and then a pullback into that demand area. And then this low becomes protected. And I want to see price continue up from there. Okay. That's it. I hope you enjoyed this video. All right. Make sure you hit the like button. All right. I want you to watch the other videos that I put out this week. You can see it here listed for the US dollar JPY. I have one for the pound. I have one for the euro USD, and also have one for the US dollar index. All right. I want you to go and check those videos out, and I will see you in the next video. Thank you very much for watching. May profits be upon you.